Oh.
And we are live. What is going on, everybody? What is going on, Chris? It's good to see you again today. I know we had a fun talk on risk management yesterday, so now we're going to talk about the world ending, as you said before we got on this call, with Bitcoin dropping. And then we're actually going to be talking a little bit about, well, probably a lot of it about real estate later, because Gary's brother Grant actually listed one of his properties, I believe, on Proppy. And then Gary has been thinking about selling his house for Bitcoin, which I think are both, for me, really fun things to talk about. But first, I think we should get into the market. You think so, Chris?
Yeah, man. You know, everybody's very unhappy at the moment, it seems like, but again, this is why I appreciate, y'all and doing these shows with you and Gary, because we can really kind of get into this idea of what's going on, right? What should your mindset be? Because I think what happens a lot of time is people get caught up in crypto Twitter, right? They get in there, and all of a sudden they want to be a longer term investor, but emotionally it's hard to handle when you've got everybody daily talking about, oh, it's going up, it's great, oh, it's going down the next day, it's the end of the world, and it makes it really difficult, right? So I appreciate what we do here, because we can get people to focus on the longer term, when we're looking at it. So, when it comes to Bitcoin, I mean, at the end of the day, we're still range bound, right? 100 and gosh, how many days is this? 140 somewhat days, maybe 121 days. I don't know. Yeah, 121 days, I guess. So it's like 4 months of sideways. And, human psychology basically is the longer something doesn't do something, right? So in terms of markets, if you buy in, I was saying this on Scott's show just a bit ago, when you buy in, it's because you expect it to go up. And generally speaking, when somebody buys, they expect it to go up. And if they're not very experienced in markets, they expect it to go up immediately and to stay up, right? Never to come back to where they entered. So when you end up going sideways for months, it gives you time to think, and the more you think, the more frustrated you get. And you start getting scared that it's the end of the thing, right? It's the top. It's all in there. It's whatnot. And I think that's kind of where we're at. We've been with it. The bears are very vocal this morning because we've had a pullback. But ultimately, we're still range bound. We could dip. I've been saying this. We could dip 55,000, drop right below the range. So, as I was talking to Scott show here, we have 3 waves up here. It's 3 waves, and we've broken back down below that second wave. Initial thought should be that's a correction, and we're going to head lower. If that's the case, then based on the height here of this, on this Bitcoin all-time index chart, that gives us a target of 55,470. Puts us right in this fair value gap, which is fair value gaps are usually what we look at to provide support or resistance. Prior to that, we have the S1 pivot here on the daily just above the range low here. So I could see a situation on the daily where we dip down here and maybe we wick down to that 55,470 or maybe even a bit lower, and we close back up around that S1 pivot. And if we got that, I would really be looking for a strong reason to go long at that point, because that would provide us a spring below this range low. So here's the thing. A lot of people are talking about this being the top and what's going on here, but there are a couple of specific things we really look for in general if this were to be a distribution range. One of the things we look for is heavy selling at the tops of the range, okay? Because that tells us that's where your big players are selling into that retail buying, okay? They're like, listen, we want to sell out into that. But if we look here, we're really not seeing that. As a matter of fact, we can see that from this range, where the range started over here back mid-March, volume has gone down. And most recently here as well, it continues to go down. The second thing we look for is, if this were to be distribution here, the rejection in this area should send us down below and continue lower. So on this move down, we should expect to see volume expansion. We should see retail jumping in on it and adding in the conviction to sell, the conviction to short in there, right? We're not seeing that either, as you can see here. volume is still pretty muted coming down. So with those two things in mind, it's hard for me to take the position that this is a top. Again, I could see a dip below the range low here, print a spring, and back up. And if we got that close back up here around this, on this chart, it's 56,800 or so. A close around that with a wick down here, and especially if it came on a lot of volume. So maybe something like this here, where we have this big bit of volume compared to what it had been. I could see, or even like this one here, right? Big volume spike. If we had something like that there, I would be really looking for a reason to be long at that point. Just because of the setup here over the last 4 months. But here's the thing, we don't have to, right? Because I was looking at this, and so this is the line I've drawn previously where we've got these areas of support here along the way. And especially right in this area from June 24th over, you can see we've had some wicks below it, but they keep closing on it, right? Including today, we're still kind of sitting on it. We still got a lot of hours left before the daily candle closes, but right now we're still sitting above it. So if we zoom in to the 4 hour, what do we notice? Well, we can see that price came down. Again, we got some volume coming in on this lower one. We got a nice large lower wick, which shows us the demand is showing up and really coming up strong against supply. Right at support, right at that S1 pivot on the hourly. We swept this liquidity here around 59,972. Wick up, we come down, we wicked up again. So what I'm looking for here is a breakout above this hourly pivot right around 61,530, 61,535, around that area on this chart. If we can get an impulsive breakout and close above that, I'm looking up here at 66,426 is the next local target. But this would be, in terms of Elliott wave, this would be a 1, and this would be an expanded flat for a 2. So you have an ABC down, ABC up, and then 5 waves down. So ABC gives us wave 2, then wave 3, and this would be the bottom here. I think if this is the bottom here and this doesn't go any lower, I think it's really going to throw the average retail trader for a loop. They're extremely bearish right now. And what does that mean? That means we would likely get a rally again up and through all this, and they wouldn't actually enter until we were breaking out here. So they're going to miss all this potential rally if we get something like that happening. And this is what generally happens, in markets. You get this move down here. Everybody's very bearish. It has to go down, has to go down. And so that's all they're waiting for. And if it doesn't, and it starts going up, they start convincing themselves, well, as long as it turns around before this level, and then it goes through, and they're like, well, as long as it turns around before this level, and they never actually go long. So they miss, potentially, I don't know, let's say this was to go up from here. They're going to miss, a 22% rally before they finally get in there. And in terms of actually trading and investing, that's an exponential increase, right? Or an exponential decrease in what you can realize as far as your return goes. So it's really interesting here. So for me, the big macro picture here still looks like reaccumulation. I could see a possibility where it drops down lower, prints a spring, comes back up, at which point I would be a buyer again. But if we don't do that, and instead we do break out through that hourly pivot I was talking about there, the odds are significant we're going to rally up through the range and continue higher from there. Now, that's not going to happen overnight, guys. Don't think, it happens tomorrow. I've talked about this week being a light week, light volume because of TradFi, and our holiday on Thursday. So effectively 2 Fridays, Wednesday and Friday. And it's just really it's a slow week with TradFi. They're all, if they're not at the beach already, they're thinking about their beach houses, right? And so,
Chris, I saw someone saying 52K for Bitcoin. Can you walk me through where they even get that idea? I mean, maybe they're just shouting numbers, but do you even see that in the charts? Like, is that even, I don't want to ask if it's possible, but like, do you see their logic when they say that?
Sure. They're looking for this area right here, this previous consolidation here. So if you look right there, right around almost to the top of this kind of area here is about 52,000. And yeah, it's a possibility. If we were to drop down through here, I'd be looking at the possibility we could hit this range next, would be the next kind of target area I'd look for. But generally speaking, if people are like you can put this, this indicator here, right? This VRVP, And this tells us what the volume is. So whatever's on the chart here, the time period that's on the chart, it shows us how much volume is transacted at specific price levels. So that tells us where the market is interested and where it's not. So these where they stick out here is you have a lot of activity in this area here, as you can see, right? A lot of overflow in here. You have a lot of activity. This is a high volume node. Low volume nodes are like this, where you have very little activity. The market's not really interested in this area. So when you look at the VRVP here, most likely what happens is when you're looking for targets, and this is huge. I teach this to our students all the time. When you're using this to look for targets, we don't look for targets in the high volume nodes. We look for targets in the low volume nodes. And now sometimes they might, if there's enough pressure coming on it, it might hit the high volume node. But the thought of it is, if you're, let's say this here, if you're selling, right, and you're going to short, you're not going to try and short where the market isn't interested, because it's going to have to chase price lower. So you're going to get a lot lower entry on your short. So usually what happens is when you get to those areas, the market isn't really trying to sell, right? I mean, we can look right here. You see this low volume node?
Yeah.
You can see we've got this wick right down into it and pops right back up into more of this high volume node here. And you'll see this over and over again. When you look at them, when you look at where the wicks are on these things, they're often in these lower volume node areas. So for me, generally speaking, we're going to look for targets in low volume node areas rather than the high volume nodes, because usually if it does hit the high volume node, it'll travel through it to the next low volume node in order to not have the market interested. So it just stops moving at that point and goes the other way.
How does this sideways period compare to other sideways periods in Bitcoin?
Well, for this for this cycle, it's right on par, right? Because we had, if we zoom back over here, we had this 7-month period over here. And here we are 4 months in over here. We even have this, which was, I don't even know how far this was. This is about 2 months here. So we've had actually, I believe, a lot more of this more muted sideways action than we had previously. If we look at previous kind of movements here, like we have sideways, here and here, but very little going up. Even in here, right? It's still kind of pushing up constantly.
Yeah.
Over here, shorter periods of time, right here and right here, but none of them really consistently as sideways as we've been here. But the thing about these longer term sideways is that the longer price moves sideways, the stronger and further it's going to break out or break down when it does.
Because it's building pressure, right?
Yeah, exactly. You'll see that consolidation happening in there more and more. So the longer it goes, the further it moves. And that's why when we had this 7-month here, it never even came back. It continued up. We had a bit of reaccumulation as it was rallying in this area, instead of pulling back here and doing some sideways and then up. So we rallied up, again, price rallied on the breakout here, almost 44% before we finally did some sideways. And off that, it then rallied off this one here after going sideways for a couple of months. It then rallied another 65%. So, again, you get these sideways movements, which just are building up what in Wyckoff, what we call building of a cause. And that's the reasoning, for it to move. And so the longer you're doing the sideways, the bigger, the stronger the breakout you should have. So again, you see it from there, you see it from there. If we break out through here, obviously we should have a good, strong move upward overall. Oh, and we do have this hidden bullish divergence right here as well.
I knew we'd hear the hidden divergence, bullish,
yeah.
RSI reversal divergence. I hear you and Melker all the time. I'm like, here we go.
Yeah, you want to watch for those. They're not a guarantee, obviously. Nothing is guaranteed in trading, but you want to watch it, especially when they're over longer periods of this. Like this right here was from May 1st until June 24th, so almost 2 months. So it's definitely something worth watching.
Well, bullish divergence means it's going to stray away from the bullish trend. Is that what that means?
No. So if it's bullish divergence, what you'll have is lower lows in price, but you'll have higher lows in your oscillator, in this case RSI, and that tells you it's a change of direction. So you'll get a bullish divergence usually when you had a bearish trend down. The bullish divergence comes at the bottom of that to signal that it's reversing up. Hidden bullish divergence, which we have here, is where you have higher lows in price and comparable lower lows in your oscillator. And that's the continuation of the trend. So what trend? It's this bullish trend that we had up. So it would be, you get the bullish trend up, you get the pullback up and the pullback, and now you have that hidden bullish divergence, which should suggest continuation of the trend higher on that.
Got it. Okay.
Chris, for the normal investor, not the day trader, but guy wants, we got a $52,000 suggestion here. We got you saying, hey, at 55.8, it becomes like you want to move in. I have a bid set it for 5 Bitcoin at 58.9. Like, see, I don't know how to do this. Like, am I really going to go and wait for 55, which I haven't seen in 2 months? I don't think I've seen 55 in 2 months. And if I did, it was for 12 units of Bitcoin. Like, there's no volume down there. These wicks, I don't think people understand these wicks, that the wick is that long line that just has no volume on it. It pierced a point and there's just nothing there.
Yeah.
And then it bounces up. So like for a guy like me holding on for 4 to 10 years, like Sam, how do you deal with all this? Because I would be scared to wait for the very bottom at 55.8, like you're saying. Yeah. And then this guy's, hey, I'm going to scalp it at 52. Good luck, dude. Like, I have so much volume I'd pick up at 55. I just don't see that.
Yeah.
And you could miss an opportunity. Like, I'm buying at 17% off the all-time high today. What's the all-time high, Sam? 74.3. So whatever 74.3 is divided by, take 60 grand into that. I think we're 16 or 17%, man. For me to buy this at 0.5% less, I got more shit to do. Quite frankly, for me, it's literally 10 grand.
Yeah. Yeah. And that's exactly how you should think about it.
Wow. I'm going to walk away from 5 Bitcoin over $10,000.
Exactly.
Am I fucking stupid?
Exactly.
You understand the math there? Sam is like, really?
Yeah.
I'm going to sit here and try to pick out, go chicken bone pick, I need 56 because, my last purchase was at 57 and I got to be smarter today than I was yesterday.
Yeah, I know.
And I'm like, dude, I'm going to grab 5 Bitcoin. Okay. Like, I'm going to grab 5 Bitcoin. The truth is I'm going to grab 5 Bitcoin at 70 grand. Also, okay. So like when you're stacking like me and you're not even thinking about price, I'm looking at this going, shit, dude, if I had the ability to buy 5 Bitcoin at 60 grand, I'm going to have the ability to buy 5 Bitcoin at 70, 80. Well, maybe not 5, but the equivalent dollar value of 5 times 6 is 300 grand, right? So like, okay, now it's 300 grand divided by 7. I'm still going to buy the Bitcoin.
Yeah.
Because it's a 4 to 10 year play, right?
Exactly.
So I look at it and go, fuck, dude.
But that's exactly how you should be thinking, right? I mean, especially the further out you're looking to go, so the further increase in price you're looking at, appreciation, the less the little 5% here really makes. And like you said, you may not get it. And so here's the dirty little secret of markets, right? These wicks many times are quick, and like you were saying, you may not get filled, right? Because when you go in and put your order in, you're behind everybody else that's already put their order in. And if they don't get through all them by the time, the opposite side of your trade happens there, you're not going to get it. You're not going to get it. And so, I rarely buy or sell at target areas. This is something I always teach our students as well. I usually do it prior to those areas because what if it doesn't? Again, nothing is guaranteed in trading, and it's often, trying to be exact is going to lose you money. So you're just trying to get toward that area. That's where you should be looking at. Look at as a range, as an area to get to rather than a specific price, at that low target area or whatever, because a lot of times price doesn't actually get to the target area. And so once again, the longer your hold period, the more appreciation you expect, the less, the percentage, that small percentage, the less of a difference that actually makes. The goal should be to get in it so you have something that's going to appreciate over that period of time rather than missing out on that trade there. And
yeah,
not
I mean,
being able to buy
I'm
it.
just going through my order book, right? I didn't realize I had this up, but I'm happy to show it's not going to create any problems for me. But just on the fill, see, I mean, last time I was able to pick up 56.9, 1.4 BTC, that was on May the 1st. Yeah. Like, I'm not unhappy with that purchase, dude. I don't care if it goes to 55 right now. I'm like, whoa, I own some of this shit at 56.9.
Yeah.
Here's 56.9 again. Okay. 1 BCF, 5 BCF, 57.9. Like, if I could ever buy this at the 57, you look at 57.9 and go, dude, that's a proud purchase. Right? I mean,
yeah.
I don't want to sell those lots ever. And you look back 4 years from now, look, this is 60 grand. I'm not unhappy with this $60,000 2.2 TCF. Why would I be unhappy with this?
Exactly.
I'm buying a franchise that never goes bad, can't ever be taxed, doesn't have any maintenance problems, doesn't have flood insurance requirements, no HOA fees, no fucking human error risk. And the entire planet wants to buy some of this shit. And they don't even know it yet, right? So I just look at these. I don't know why people get all wound up, dude. I own some of this shit at 69 grand and don't care.
Yeah. And I just saw an article, a story the other day, maybe yesterday or something, the day before, but Steve Ballmer over there at Microsoft, he came in, he was hired as the 30th employee at Microsoft, no stock options at all. Today now owns more stock in Microsoft than anybody else.
And and has a greater market value than Bill. See, this is what I tell people. You do not need to be a founder to make a shitload of money.
Yep.
You don't even need to be the CEO. You need to come in and fix it. He came in in year 10, I think, or 6 of their thing. And he basically took them to the big leagues. He made them more corporate.
Yeah.
And he came in for 0 equity.
Yep.
He took a fucking salary, man.
Yep.
And
he bought in along the way. And do you think he said, "Oh, it's too high today to buy, I'm not going to do it"? No, he just kept buying because he believed in what it was. He believed in where he was at, and look where he's at. And so I think people need to kind of take that same approach when they're looking at Bitcoin. Stop worrying about what the price is today or what the price is next month. Have that bigger kind of view on it. And there's not a whole lot of things I often talk this way about because I'm a trader, right? Which I think if anybody's actually listening, if they actually listen to me, that should be something significant. It should be, listen, I generally trade, but Bitcoin, I'm telling you, if you're going to trade Bitcoin, fine, go ahead and trade Bitcoin. But if you're going to do that, make sure you've got a bag of Bitcoin. I keep saying this, that you don't touch, period, end of sentence, ever. Make sure you don't touch.
See, that's why I love doing shows with you, because I picked it up immediately. I'm like, here's a short-term trader. He sells short-term trading courses, which, like, I've seen what you do, and for the price that you charge, I'd buy one of those programs tomorrow morning. It's if you do nothing else but learn one little trick. Okay, like, hey, what does really RSI bullish divergence really mean? So that you can say it and you're like, dude, I know what that means. I really understand that, right? And you constantly say, hey, look, you need to just buy the Bitcoin and sit on it. Don't touch it. And I just like that. Quite frankly, I think if you're going to trade anything, there's a lot of other coins probably worth trading more than Bitcoin. They're more violent.
Yeah.
Right.
Yeah.
If all you're going to do is trade these wiggles, there's things that wiggle a lot more.
Yeah. A lot bigger wiggles.
Yeah. And you can get in and out. I mean, like maybe Morgan Stanley can't get in and out of XYZ coin because they're putting $10 million to work every day. But a guy throwing $1,000 around, I wouldn't do it on Bitcoin. I'd go.
You guys make it sound like dollar cost averaging really is the best strategy for Bitcoin.
Dude, dollar cost averaging is the genius way to do everything. It just doesn't have any alpha ego in it. For some reason, especially men, you want to pick the fucking price. And like literally you will buy cheaper if you DCA.
Yeah.
Like it's about 20%, dude. You're going to always be ahead of the curve. I mean, mathematically, I can take you through it and go, oh, wow, if you would have bought $69,000 and you would have bought the very high and kept buying every month, you would still be like 17% above the market. So effectively, you would be at 60 G's.
Yeah.
And there have been many times when Mr. Saylor has been above the market.
Yep.
Like, it's cool. He doesn't care. He's buying Bitcoin. See, he doesn't care. He's stacking Bitcoin. Just like you would stack a Chevrolet 1965 Mustang in mint condition, you wouldn't look at the price every day in 1970 and go, hey, what's the value of this Mustang? But in 2024, you look at it and go, hey, what's the price of the Mustang? Right? Yeah. It's in mint condition. There's 2 left in the world. Well, this has to happen with Bitcoin.
Yeah.
Okay. You have the Rolex, the entire watch market is rolling over like it's just falling apart, man. People think I'm hilarious because I talk about watches and jets. When the luxury watch market and the jet market rolls, the super wealthy have consumed everything they possibly can consume. They don't want any more. They're no longer the bid in the market, dude. Hey, I'll take that $230,000 watch. That bid's gone. He already has 3 of them. Now the real market shows up. Guys like me go, fuck, I'm spending 230 grand on a watch, dude. I'll give you 23 G's for it, but I'm not going to give you 230, right? So this market, once you take the big money out, the market really changes. And I used to have some friends in England, a guy named Caspar McDonald Hall, and I moved out to his neighborhood and we went to dinner one night. I think the guy literally took me to dinner to give me one little rule. Hey, don't ruin the market here. That was his message to me. Hey, don't ruin the market. I said, what, dude? He said, look, you can come in here and pay my waitress, my housekeeper twice as much as I pay her, and you'll disturb the entire village market. Like don't ruin the market just because you can. So,
wow.
Yeah, right. So like they want to control. Hey, look, we don't need to destabilize our game that we have going on.
Well, anyway, so these people, just a quick question on the watches though. So is that an indicator that the market's bad in general, or that they will enter Bitcoin because they have nowhere else to put their wealth, or is it both?
Well, the point I'm trying to make is that Rolex watches have a unlimited supply. Just because they hold them back a little bit doesn't mean that it's unlimited. Bitcoin, I don't think enough super rich people have Bitcoin. There's just 21 million of these units, right? So my point is, once that market rolls over, we're moving into a market that people are going to be concerned about the underlying basics for the economy. Like when you see super rich people pulling back, that is an indicator, party's over. Like 2 years ago, dude, I could not charter a jet. I couldn't buy a jet. Okay, like I couldn't buy one. I couldn't charter one. Everything was in the air. Today, 300 airplanes being pitched to me. Probably do a charter in 3 hours. Hey, I need to go to New York. Boom. There'll be 12 bids, dude. A year and a half ago, couldn't get a bid. Couldn't get a bid at the top of the market. Hey, I'll pay 18 an hour. Okay, no bids. It's unbelievable. Now, wide open. So these are just indicators to me that look to me like the market's gonna roll over at some point. And at the same time, I get a phone call a day ago. People want me to relist my home in Tierra Verde, and thinking it's worth $4 million more than it was 6 months ago. So, and I can see that happening at the same time that the Rolex market and the jet market rolls over, because people are put in situations. I was in New York this weekend, dude. There's no chance of me paying those rates in New York. I wouldn't live in New York or New Jersey or anywhere near there with everything that's going on. It's extremely expensive. It's filthy. And you know, the odds of getting shot or peed on by somebody in the street in New York it's like they're almost equal, dude.
Yeah.
I mean, I was embarrassed to have my child there. 14-year-old kid. She's looking around seeing stuff that she doesn't need to be seeing at 3 o'clock in the afternoon.
Yeah.
Hey, we got a lot of people in the room, I think. And I just want to say special thanks to Mr. Bryant. He whacked us a $20, $19.99 super chat. Thank you, buddy. It's really appreciated. want to say hello and good morning or good afternoon to Essex, England. I lived there for 2 years, off and on, in Rayleigh. So thank you, Rajesh. Is it Rajesh Taylor? And Decentralized Mind, it looks like he's in Europe. Hello to everyone in Europe. I love Europe. Well, I used to love Europe. Europe will be good again one day, but it's got to get its shit together, I think. So we lost Chris, did we?
He'll be back. He just had a connection error. But if you want, we can transition to talk about you potentially selling your home and maybe the logic behind that, because I'd like to dig into that.
Sure, man.
I mean, so first question would just be, why is the price of your home gone up so much? I mean, besides the obvious reasons. I mean, what's the logic there? Why are people going, oh, is it Florida? Is it inflation? Is it just the real estate market in general?
I don't know. I know there's no real estate. There's nothing here. Let's see if I can share my screen with you.
I got you right there.
Oh, do you see the Zillow up here?
No, just go to the tab where it'll show you share this screen when you're on the Zillow.
Share this screen when I'm on Zillow. Yeah. There's Zillow. I'm such an idiot. Let's see. Present. Share screen. Yeah. There you go. So this is the Tampa St. Pete area. Okay. Can you see this?
Yeah, I can see it. Yep.
Tampa airport here. You have another airport right here, private airport, which I love. I love flying out of this little airport called PIE, St. Pete International. Or yeah, it'll fly anything to. They take a bomber. Now I went and selected a number of different homes, kind of like in the $4+ million range. Okay, thinking about people moving from California. I know some of you guys are like, oh, these are really expensive homes. Yeah, they are. My brother's listed one yesterday, put it on blockchain at 42 million in Miami. So they're just numbers. Okay, I wouldn't get all on them. I'd say 4 months ago, there were red little light bulbs all over this place, dude. Now there is very little to buy here. Okay, if we go to downtown St. Pete, which is, I live here, out here on the island. Okay, this is a little island called Tierra Verde. Well, I'll just show you the area, right? Where the hell is this place? There we are. I live right here, and there were 5 homes in this area, all for sale. They're all gone. I sold a house right here. This is the house I sold for. Remember the house I sold, 1906 Ocean View Drive? I sold this house, took a $300,000 discount, converted it to $66,000 Bitcoin. So today I'm underwater, right? I'm underwater 10% on the Bitcoin I deployed there, and I took a $300,000 discount. So, probably I'm bleeding, right? I probably have effective cost of Bitcoin at probably $70,000. Okay, I got six. Let's see, what did I pay? 2.4. I ended up with about 80 Bitcoin from that sale. Is that right? I'm having a little hard time doing math this morning, but yeah, around that. And this property here, I don't know why it's not showing actual addresses, but oh, there we go. What do you see on your screen, pal?
Yeah, I see exactly what you see.
Yeah, no, I'm asking you what you see though, because I'm not seeing much.
I just see the Google Earth view of the property.
Okay. Do you see the roofs? You see the actual homes?
Yeah. Yep.
So these homes here's a home. I know that you can't probably see the house. This home was bought for $5 million. They tore the house down immediately and rebuilt on it. There's a couple of $13 million homes here. I had this house listed for $14 million. And it took the bid. A guy came in with a full offer, cash, 10-day close, and he had a major coronary on the day of closing. And I couldn't bring myself. The real estate agent called me up and said, "Hey, what do you want to do?" I said, let's pray for the guy. Like, I'm not going to jam the guy on a house sale. 4 months go by, I take it off the market, and 4 months go by. I get a phone call yesterday. "Hey, we'd like to list it for 18. Okay, now 18 million. Okay, I have 8.6 in this home. I paid 8.6 for it in 2020, October of 2020. So I've been in this home for almost 4 years now. 100% mortgage. Okay, and let's assume I'm paying 6%. So I got 8.6 million. I took the money that I didn't deploy in the home and I bought Bitcoin with it. Right, so I've done okay there.
Yeah.
However, had I taken the 8.6 million, now let's do that. Okay, 4 years ago, I put $8.6 million to work, and that $8.6 million, had I deployed it into Bitcoin, I would have bought $8,000 Bitcoin, and
Jeez,
that
you're about
8
to make me
million
cry.
would be worth $72 million today. Okay, so
Wow.
if you want to understand the power of Bitcoin,
Yeah.
a Bitcoin, had I invested, ladies, for all you guys that think a home is investment, had I invested $8.6 million in October of 2020, I would have $72 million worth of Bitcoin today. Instead, I have a house that's worth $14 million, supposedly. Now, the question is, what do? Do I sell the house at 14 to 18 million? Chris, how many Bitcoin do I buy at $18 million, man?
And right now,
Yeah, it's 60 grand.
at 18 million,
It's going to be 300 Bitcoin, right?
10, 100, 6, 12, 18. Yeah, about 300 Bitcoin.
300 Bitcoin. So you got to remember now, Sam, my goal, and I've told you this since you've known me, my goal is to own 1,000 Bitcoin.
Which if that's your goal, and based on our conversation yesterday, that's a hard. I mean, that tells me right away, man, you could complete almost 30% of your goal in just one decision. Why would you not do that?
Yeah, well, maybe not even 30%. I mean, you don't know exactly how many I own, but like it's a bunch, right? I would have to go sell. There's other, because you asked me the other day, hey, how do you allocate capital? Well, you have to plan this. You can't just sit there and go, like, plan it, dude, just like you do a marriage or any business. Oh, wow, I'm in business with Bitcoin. This is my business, dude. Okay, and my business is to own as much of this shit as possible. It is absolutely no different than my brother going, I need to own 10,000 apartment doors at all cost. Own 10,000 units, dude, and I'll sell it to BlackRock. Well, I want to own 1,000 fucking Bitcoin. Okay, and maybe I even hand them over to my kids one day. Maybe I don't. Okay, maybe I sell them all and help the education system one day. But if my goal is really, this isn't about price, dude. This is about the asset. See, I think Bitcoin is about the underlying asset, not about the price.
Huh.
The price is actually a red herring. Like, I don't give a fuck what the price is. Because I already told you, I'm going to buy 1,000 of these. It doesn't matter if it's 100 grand or 40 grand. And I think other people are thinking exactly the same way. They don't care what the fucking watch costs today. They're not selling the watch. Super rich people are not walking in with their Rolexes going, hey, I got to sell them now. No, dude, they're putting them in their vault and keeping them nice and clean. They continue to invest money in them, insure them, send them to the fucking clock guy every year, make them cleaned up. They're actually investing money in them when the rest of the people are wearing them trying to show off. So, I started looking at this, go, okay, I love my place. We got, you and I probably walk 3 miles a day.
I know. We were just talking about that because the place is so big for me to go see Gary. Hey, Gary, I'll be right over. See you in 5 minutes.
It's not that big, but it is a journey. And you know, so could I go somewhere else? Now, this is the challenge, and this is why I brought this map up. If I can. Yeah, see this map. There's no, when you drill down on these, okay, $5.75 million house, this is 3,000 square feet, dude. I can't live in 3,000 square feet. I just can't, okay? I have 2 monster dogs. I paint. I got 2 kids, and I hate people being on top of me. I like a lot of space. Yeah. Here's a place for $9.75 million. It's $6,000 a month HOA fee. $72,000 in HOA fees, bro, for 3 parking spaces and 4,000 square feet with great views. Okay. Now I'd have to go buy an office because I work from here. Cool thing about working from here is I get a monster tax write-off on the whole thing. I mean, literally I will write off 70 to 85% of this home. So I live here because of the way I do my business, it's kind of a funky thing. But it's still $18 million, and it's still 300 Bitcoin. And my other investments, I cannot liquidate them. I cannot call my twin brother up and go, "Hey man, that $10 million on the apartments that you send me 30 or 40 grand a month on, I need to dump it." He's like, "Well, I'll call you when we dump it, dude." Like, there's no getting out of that trade, right? Unless I took a monster haircut. I can't call my ex-partner up and go, "Hey, let's accelerate the sale of this company." You know, we already got a deal. So I could go to her and say, "Hey, I'll give you a $30 million discount to get me out." The problem is she has to be willing and desire to have a $30 million savings and have a new note with somebody else. Maybe she kind of likes my note. I don't know. So, you know, people can't just do like if Dan Tapiro is in Circle right now and they're going to IPO, he can't pull his money out of Circle and go invest in Bitcoin. So people forget that. They think that it's just easy for me. This is my job. This is literally, I'm sitting here thinking, okay, I'm going to inconvenience my life massively to go grab $18 million to deploy it into Bitcoin and then go live somewhere, figure something else out. But I think that's the right decision, dude, because this house can't be worth $18 million. Now, I mean, it is worth $18 million for somebody in San Francisco that wants to leave the dirty needles and the shit show. Okay, sure, dude. Dude, get me out of there. Okay, my kids are going to die. They're all going to turn into faggots, and everybody's going to be on Prozac and Ozempic. Like I would leave there also. And these guys just don't care, dude. The money's so easy for them right now. They're leaving home. My brother is literally in a $70 million home in Malibu. Like, I don't get, okay. I don't get why somebody would pay $42 million for his home in Miami. It's beautiful. You might want to pull that up, but he just put it on the blockchain yesterday, Sam, with Proppy. Congrats, Natalie. If you guys aren't following Natalie and Propy, Propy is NFT technology that's built around real estate. Grant lists his property with Propy, who has a token, by the way. I think
42
Tim Draper's
million
into that project. And I'm probably I'll probably put the house on the market through Propy and see what happens. If people are calling me saying the market's really strong, what do you think, Chris? Would look? I bought this at 8.6, right? It appraised at 8.6 4 years ago. The entire neighborhood was underpriced. I knew it was underpriced, but you know, I could hold on to this property. Let's say it goes up to, let's say it holds value here. Okay. What's the likelihood of Bitcoin going down to 40 grand for the next 2 years and staying there? I think it's very small. Okay.
Yeah.
The challenge really for me would be, okay, I sell the house. I have 18 million. I have 17 million after fees, $1 million in fees to the real estate agents. Now that has to change. Okay, that is a total cartel. Talk about a oligopoly, right? Where you have this machination of different players in the real estate market, and they are all connected by one thing: total greed and making fees for doing very little. Zero risk associated with title company, real estate agent. It's zero risk, and they're making 6%. It's too much, man. To make 6% on an $18 million home, I mean, come on. Okay, it's $1.2 million in fees or more. So it makes sense to me. I think for Grant, this is more of a promotion. But I would love to do this through blockchain. I would love to do an all Bitcoin sale. I just think the Bitcoin people are going to be like, why would I give you my Bitcoin? I'll just give you fiat. So it would be hard for me not to. So Chris, the question is, you have $18 million sitting in your bank account. 8.6 of it's got a 6% note on it. Would you buy 300 Bitcoin at today's price, or would you just sit there and layer in and do the 52? Hey, I'm waiting for 52. I'm waiting for 52. I'm going to buy 300 at 52. Yeah,
no, I don't work that way. I'm much more interested in getting a price at which I'm likely to get it rather than one that it may hit. Again, because even if it does say hit 52, it might just be like a snap drop and back up, and you may not get a chance at it. And then, all the emotion comes in. Then it's, okay, so it didn't go down. Is it going to push down further now? Or now I'm scared to buy because we did get the dip there. This is the big thing that usually happens, right? People are all big about, I'm going to buy at this level. And then price gets there and they don't actually buy, right? Because they get scared because, oh my God, it actually hit that level. It's easy to say it when it's up there and sound real, sure about it. But how many people said they were going to buy 15, 16,000 when Bitcoin was coming down? And then it got there and they didn't buy. I know multiple people who said that, and they have never bought yet. It has rallied from 15, 16,000 all the way up to 74,000. They still have not bought because, they get in there and then everything becomes short term, right? They convince themselves, okay, well, what if it goes down further now? Because we did get this big move. And then it goes up. And again, it's like I was talking about, it goes up. They're like, well, okay, I'll buy if it gets to this level. And then it gets there. And they're like, and it starts pulling back a little bit. And they're like, oh, wait, no, it's going to come down lower. So I'm going to wait. And then it breaks out higher. And then they move their target up higher. And he's never freaking buy. And this is the unlikely story, for most retail traders, whether they want to admit it or not. Most of them will go through this at some point. And it's usually the newer they are to the market. Because once you've been in the market and you're able to stay in it profitably, for a few years, your whole mentality kind of changes basically. You have more confidence in what you're looking at and why. But for most of them, it's tough. It's your emotions come in and it's tough. So, for me, it's always more important to get the buy than to get the buy at the absolute best price as you're doing it.
Yeah. Swami said layer in makes sense as we hit downside targets, and then if missed, protect upside on a break.
Yeah. So look, I'm looking at a few charts. If you look at the chart behind me, you see this red wick on Iris. This is what I was talking about. This wick, it happened to fail on the very upside, right? It just collapsed. That's what you're talking about, right, Chris? This is what I'm saying. Hey, look, how much volume happened there? Because you probably didn't sell that at 1491. Right. You might have sold it at 1480, but I don't think you hit 1491 at the top. And this is what the guy's trying to do at 52. Hey, I'm going to buy 52. Well, if you're going to set a bid at 52, I'd recommend you set the bid at 52,001.99. Right? I mean, you don't just set 52. Like,
the targets, again, I've just found it's just easier on you. If you don't, because I've been doing this for so long, right? And at the beginning, even once I started actually like we had that discussion about how the first few years really sucked, lost a lot of money. And after that had to, then I had to figure out, okay, what did I have to learn? I had to implement, I had to practice. So even at that point where I was actually starting to make money, I still missed a lot of sells and a lot of buys because I was holding out for those exact targets. And it was once I figured out, listen, look for, your targets kind of give you a guide.
Zip code.
Yeah. Don't worry about hitting the exact house, right? Get in the neighborhood. If you can get in the neighborhood, overall, your journey along with trading is going to be a lot more profitable, and it's going to be a lot less stressful because you stress out a lot when you miss those targets because, again, then the emotion comes up and it's, well, God, is it going to go back to that level and further, or is it not going to go there? And you're going to beat yourself up, emotionally about it all the time.
Yeah, for sure. Got a lot of comments here, Sam. I don't know if you want to go through some of them, but a lot of people are engaged, and I love the engagement. I don't know about you, Chris, but I love the questions and answers and comments.
For sure, yeah.
I mean, there'll be a couple of comments in here you don't really like to read, but
what do you think about Gary? Crypto Bad Fox keeps telling you to diversify into ETH. Given our risk management strategy, to me, from what I know, that wouldn't fall in your strategy now, would it?
Well, first off, I'm not a big believer. I don't know why you need to diversify. So I think this diversification thing, I mean, I've never been very successful having 3 girlfriends at one time.
That's a very good point.
By the way, never produced anything other than angst. Okay. And usually all on my side, right? Because I'm like frenzy. Okay, what am I going to do? When am I going to? So I'm not sure that I really buy this diversity thing, Crypto Bad Fox. Maybe you can have 3 or 4 boyfriends at one time. I like, if I look around, all the great wealth on this planet's been made from, what does Elon have? 0 diversity, dude. Okay, Jeff Bezos is so heavy Amazon, he can barely take anymore. Dell, totally overloaded with Dell stock. Michael Saylor, okay, all in. Not just him, but his company, dude. He literally sold a public company on, hey, let's do this. So I don't really get the thing on one, I don't get the thing on the diversity. 2, if I'm going to diversify into another risk element, I'm not doing it with a 30-year-old kid. I'm not. And people think I'm being really mean on this kid. Look, I'm sure he's brilliant. I have never known a 27 to 32-year-old kid that could become a billionaire overnight, it not fuck with his head. And then secondly, I've never known a company, entity of any type, that in 5 years could build such a strong organization that if something happened to him, that company would continue to run on just like it's chalk and cheese, dude. ExxonMobil can't do it, dude. They take 20 years to figure out how to do the Passover well. Okay, so for you guys to sit here and go, well, it's decentralized. You're fucking stupid. Okay, there's no company that's worth this much fucking money, $600 billion. They got highly organized, especially because it's decentralized. I mean, look how bad the marketing program was on Bitcoin. Okay, that's a failure of decentralization. There was no common message. So if I'm going to go play with Ethereum, Crypto Bad Fox, I'm gonna probably go buy something different like Solana, because I think there's more upside in it and no more risk. In fact, no more risk than in fact, I don't even know who runs Solana. Okay. I literally do not know that if he died, what would happen. I'm sure something would happen, but it to me, they're totally different investments. My going into Ethereum, I have human error risk. I like Node 40 better than Ethereum. Okay, because I have time on my hands. Then I'm solving a really complex problem through Node 40 that Ethereum's not solving.
Yeah.
Right? Somebody's gonna have to report on Ethereum. Now, I'm not saying Ethereum's gonna fail. I'm just saying for me, I'm gonna buy Bitcoin. And I don't know why I would go chase. Quite frankly, I'm better off doing the miners, dude.
Yeah.
Okay. It has so many plays to it now. The AI play, the Bitcoin play, miners go up. If Bitcoin rolls here in the next month or so, I think we're gonna find out, is it a $50,000 product or a $78,000 product this month? We're gonna find out, is it 50 or 70? Which is it? Bitcoin goes up, the miner's gonna roll like a mofo. Okay, so like, to me, there's just a lot better opportunities if I'm gonna get diversified. I don't have to stay in crypto, guys. There's ADT, there's MicroStrategy, there's a lot of companies out there, ADM. Okay, there's companies out there that are really into AI. I don't think this is just a currency play now. This is an AI technology, digitize everything play.
Yeah.
Energy companies, to me, the energy companies are trading at premiums that are too cheap compared to the premiums being received by the people using all the energy. Like that's bizarre to me. Okay, people that are using energy from a company like Exxon that's got a 10 multiple, or able to get a 40 and 50 multiple using energy that they don't even own. They actually bought it from a company trading at 10. I think some of those companies become technologists.
Yeah. Yeah. No,
So
I mean,
to me, those are some good, those could be good investments.
yeah. Yeah. And I like the point you make that, diversification doesn't mean that it has to be in crypto, right? I mean, there's still opportunities outside of crypto. Again, I think when you and I are talking about Bitcoin, I think we talk about it beyond what most people tend to think about, right? We're not looking, I mean, we talk about the price because, let's face it, higher prices bring in more interest. It brings in more development. It brings in more possibility. But that's really what we're looking at. What does Bitcoin kind of lead to, right? Bitcoin becomes the base layer. What then is built because of it? We've got the ETFs right now. Soon we're going to have options on ETFs, and we'll have other financial products built on Bitcoin, again, as that base layer. And all of a sudden it becomes really, really intriguing. The fact that we've mined all but like 6 or 6.5% of the Bitcoin out there. Tillman, he's with me on Beards and Bitcoin. We do that Wednesday show, but he brings up a great point. I mean, theoretically, we could just be done. We could not mine anymore. And there's so much Bitcoin out there of what was supposed to be mined that it's fine. It's doing it. And all of a sudden, miners don't work on mining revenue, but they work on transaction revenue or whatnot, right? And with Bitcoin as the base layer, these things start really happening. And so, again, I think a lot of people have come in because they've seen, Bitcoin rally so strongly over the years. And they come in now, but they're still thinking just in terms of, okay, if I can get it today at this price and sell it tomorrow at that price, rather than thinking, what if what I'm buying today, turns into this big, huge thing, right? And that's going to continue to drive the value of it up as well. The more financial products, the more things that are built on Bitcoin, the more valuable it becomes. And the more people are going to want to hold it, which means the higher price is going to go, right? Because you're going to have to pay a higher price if you want to get more, because people are going to want to hold it. And so, yeah, I think, you're in crypto, so you're in Bitcoin, but you don't have to just diversify within crypto. There's a lot of good options, outside of crypto as well. If you actually want to diversify, and that really kind of changes your risk as well, because if you're diversified in crypto, here's the thing. People talk about diversification in stocks, right? But what happens if the entire stock market goes down? Well, it doesn't matter how diversified you are. You're basically all going down, right? Same thing with crypto. If crypto goes down, well, your diversification doesn't do anything. You just continue to go down. So I think when people, are looking at diversification, they need to understand that, because a lot of people get caught or have been caught in the previous years in stocks with this idea. Well, I'm just going to diversify sectors. I'm going to be, I'm going to be doing, what defense over here and whatever over here. But the stock market takes a hit and gets into a recession and everything kind of goes down, where they should have been diversified if they're going to diversify. into things that'll react differently. So I think it's a great point to be bringing up there as well. Sorry about that.
I'm looking at some of the comments. They're all talking about how useful or unuseful ETH is, which I think is pretty interesting. A lot of people have asked you, Gary, about energy. So like Gorilla Time wanted to know what you think the top 3 energy companies would be. Which is kind of an interesting question, I guess, based on what we were talking about. I don't know how you would answer that. I think I know how you would answer that. You would always say the top 3 energy companies are going to be sovereigns and not companies.
I think that's true right now, for sure. Top 10 largest energy firms are not public companies. Well, maybe Saudi Aramco, if you consider them public. I think there's probably 2 boards at Saudi Aramco, and one probably matters over the other. Look, I think America is really well situated. If Trump is our candidate and wins, the energy companies are going to do very well. I think the greatest energy companies are going to put Bitcoin on their balance sheet. I'm not trying to be funny here. I'm actually think the leaders will be companies that move into this digital space very aggressively. It may not actually be fossil. It may be nukes. It's a little weird to think the nuclear industry could move quicker than the fossil industry, but I think they're going to get this much quicker. And they're going to see this as a data play and a data center play and AI play and an everything energy play and a way to get off of selling the worst energy on the planet. Okay, if you're a nuclear power company, it is extremely difficult to sell into the market. And the reason is because you are the worst energy on the planet. Okay, literally, you're at this is all the energy out of a nuclear power station does, okay? It literally doesn't change. And that is a problem. Because what do? Turn my phone off, turn my phone on, turn it off, turn it on, turn this on. I need 14 TVs with remote control that are all started at the same time. I need my HVAC at 68 degrees. I need 14 units. I'm doing AP. I need more GPU power. I need this, I need that. Like, they're selling it 3 cents a kilowatt. If they can use Bitcoin or AI to toggle, they're vomiting into the grid. Imagine something just vomiting power into the grid. Like bro, gotta quit vomiting. I got no place to put it on a Saturday afternoon. Okay, you can't call a nuclear power station up and go, hey, it's Saturday, dude. It's cool in Texas. Turn down. They're like, would you like a meltdown? Okay, this is what they turn down. Wind, solar, they start cutting everything. The natural gas guys that y'all hate and the coal-fired power stations that the people in California think, you know, dude, guess who cuts? They cut. So take them away from the system, you don't have an electric grid. Okay, you take fossil fuel, nat gas, and oil and coal off the grid, you do not have a grid, dude.
Yeah.
Like it doesn't work. So you greenies are completely fucking out of your total minds. You have no clue how this works at all. And China's going to build one coal-fired power station every week until they can't do it anymore, until there's no more coal, because they don't have any natural gas, dude. They don't have LNG. Okay, they're not buying LNG from Oklahoma. Like, they don't trust us. Okay, they're not going to do what we did. Hey, let's buy all our F-15 control panels. Let's build all those in China because it's cheap. Well, that was stupid. Like, that was just dumb. China would never do this. Okay, China would never buy all of its crude oil from somebody. They're going to diversify the shit out of it, and they're never going to stop building coal-fired power stations. So this whole coal-fired warm greening gas CO2 thing, it's a total bullshit. Okay, it's just not real unless you get everybody to cooperate. And we're not in a cooperative decade. if I may remind everyone. We're in a war, like everybody's fighting over finite. And if everybody's fighting over finite resources, Sam, what happens when they realize, oh, wow, there's this finite thing called Bitcoin? See, I think there's a massive fight between sovereigns over finite resources, AI, intelligence, and hard resources, wood, food, energy, right? Wood, food, energy. That's basically it, man. Wood, food, energy. So what do the Chinese? They go to Africa and they go, hey, I'll give you index, man. 30-year contracts. I'll buy index. I'll buy wood, 80 million tons of wood from you for the next 8 years. Don't care what the price is. I'm paying you index. So I'm not sure how I got off. Oh, the energy question. I think some of the aggregators may do very well. Okay. Some of the Williams of the world, people that bring all this stuff together, but I'm not sure the fossil fuel player, the explorer, is going to be the main guy. They have to, their cultures aren't situated to be very like quick, make a bunch of quick moves. Their boards are all very old. And I think it's just going to be very difficult until they see a sovereign say, I'm mining Bitcoin. And then they start to realize, oh, wow, that research project should not be done in Texas. See, the Texas projects are kind of cool because they're acting as a load balancing solution for Texas. Yeah. But I don't think that's the main use of Bitcoin. I think the guy that's going to win, you got to remember, in order for them to play that role, they had to transport that gas all the way down to Texas. Now, maybe if it grew up in Texas and it's sitting right next to a data center and has no transport, but you got to remember these prices are based on the product showing up at a delivery point, like at the Henry Hub. Well, in order to get it to the Henry Hub from West Texas, it costs 57 cents. When the price is $3 and it costs 57 cents through a different company, well, why would you spend 57 cents transporting the stuff when you could just do the data center right there? If you're in Montana, there's $1.15, dude. You don't need to transport anything down to Texas. You just say, shit, I'm going to stick the mining right here in Montana where it's cool. And then you're going to start thinking, shit, there's some stuff up in Canada and Alaska that we haven't been able to tap into. Why? Because there was 1,800 miles of pipe needed. Now that energy is sitting under the ground, dude. We know exactly how much is there. Literally, it's like looking into a carton of milk and going, oh yeah, this shit never expires. And we know there's a quart in it. So there's a quart of oil sitting in Alaska. They have to build a massive pipeline for, and they're like, we don't have to build a pipeline. We could just put a data center up there in that nice cold weather, and we have land forever. Just drop a bunch of freaking data rooms, man. That probably sounds a lot simpler than it is, but if you think about being in the middle of Russia, in the middle of tundra, you know how much you could do? You don't have anything to work around. No other companies or buildings or infrastructure. You just start dropping data centers, man, and mining Bitcoin or mining AI. So they'll figure it out because the guy with the least cost, and I think the least cost energy is going to be the energy that's literally sitting in that carton of milk doing nothing because it has no way to get to the market. And there's not enough volume to build an 1,800 mile pipeline. Yeah. That assumes that you can keep these pipelines up. Okay. I hear there's rumor in the street that there's two guys in a rowboat. They just move around Europe and they smoke cigarettes and they blow natural gas pipelines up between Russia and the Ukraine and Europe. And so, you got to remember these fossil fuels are subject to two guys in a rowboat with very sophisticated equipment, and they go in 90 meters of water dark at night and blow up two massive pipelines going through Europe. So that happens. And when that happens, and if I'm a sovereign with those pipes, like I'm not bringing my natural gas to Europe ever again. I'm going to just mine it, dude. And I'm not going to spend any transport fees to get it there.
Well said. Chris, do you have anything to add? We're going to get ready to close up here probably right around 11:15.
No, I mean, I think Gary's got it pretty spot on there. you know, a lot of people, they don't think about, you know, they think about it very simply. They don't think about the other cost associated, you know, when you're looking at things. So whether we're looking at, you know, buying Bitcoin, or you're looking at data centers and, you know, and energy, you know, there's a lot more to it than simply just, you know, what people in their mind want to do right away, right? I mean, if that was it, we'd be doing that, be all quick and easy. But there are those other associated costs. There are those other, and not just associated costs, but also, you know, even if you go, okay, well, sure, maybe we could make some money on this. It becomes, well, what's the opportunity cost? What else could we be doing instead, or how else could we be doing this instead? And so, you know, if only the answers were as easy as we'd like them to be, you know, with all these bigger issues in the world. But the one thing for sure is, you know, we're going to need more energy. I know here in Texas, especially when you're looking at the, I believe it was the San Antonio to Austin to Houston area, but more especially toward that San Antonio area, the projected increase in energy consumption is huge. And so ERCOT, our idiots in charge over here of the Texas grid, you know, are trying to figure out, well, how the hell do we meet this demand that's coming up over here? Because the demand is coming quick. If you guys don't know, over there in San Antonio, not only is it, you know, when we talk about, you know, Bitcoin data mining, stuff like that coming in, but they're also really, it's huge areas as far as, you know, and, you know, again, AI being such a big part of everything's going now. When you look at 3-letter agencies, look to San Antonio. When you look at the military, look at San Antonio, and everybody's incorporating AI. And so that's going to, you know, that continues to build to that. And so you go, okay, well, how the hell do we get, you know, that more energy over here? Because if you live in Texas, you know, it gets hot in the summer. I mean, you live in Houston, it's stupid over here. We have these stupid warnings every day for a week now, these heat warnings, because even when it isn't 100 degrees, you know, it feels like it's 115. And so, you know, people are out here popping up their air conditioners and everything else. And so this becomes, I think, a really important issue. I think it's a lot more important than most people actually realize. You'll hear talking points sometimes from, you know, presidential candidates about energy and whatnot, but I think most people don't really understand how deep that goes. And I think the important thing, I think the really cool thing is people that are listening in right now, if they hadn't heard about it, they're hearing about AI now and Bitcoin mining and how, you know, high performance computing and how all that works together and the draw on energy that's going to create. And so they're a step ahead. They can start looking at this going, yeah, okay, it is a much more significant issue than actually what I thought it might have been. So I think it's really interesting to see how this energy issue plays out here over the next few years. But again, you know, that's why these AI, these HPC companies are looking to, you know, partner with or take over these Bitcoin miners, which are really, you know, just big data centers. It allows them to get in rather than spending 2 years and all the money it would cost to build a new data center, because that's what it takes, about 2 years. So they can get in there now where they need the HP compute now, right? They need that now. So yeah, you know, living in Texas, you know, with this big expansion in energy needs, I think it really becomes interesting here, especially because it wasn't more than just a couple of years ago when the grid almost went down in Texas, when we had that winter storm that came through. We were like supposedly 30 or 45 minutes, something like that, from the grid going down. And if the grid went down, it was going to take like a month plus to get back up. I mean, you know, this is what we're dealing with in Texas as we continue to draw on business and energy consumption here.
Now, Chris, I know that if you look at the screen right behind me, I know you were getting bullish nat gas about I don't know, 3 months ago, around $1.87. I remember it hitting $1.87. I'm like, whoa, man. I started my career, it was $7.63 for tight sand gas, which is another subject, but about $3.50 for normal gas. Like, and I went into the market and went, so there's a tight sand gas that gets $7 and there's another gas that gets $3 and they burn exactly the same. You knew that shit was going to change, right? So here we are, $1.87, dude. 25 years later, the market's moved to 240. Like, what made you get bullish on nat gas back 4 months ago?
Just the chart. Honestly, it wasn't anything fundamental. It wasn't anything with that. I just looked at the charts. Again, the way that we teach our students look at the charts, and it was saying it was going to rally up a bit, and so we've kind of gotten that right now. And at this point, I don't think it's done. I think we've still got some further potential upside here. But man, that rally up went a bit more than I thought. The previous one where we ran up to like, what was it, $9 or something like that. That was that. We went up a bit more than I thought we would there.
Well, that was two years ago. That was in July 2022. That was when y'all were having all those problems, right?
Yeah. And so, just where we're at here, again, we've got the pullback now that we've had more locally, and looks like we've got some further upside. Bigger picture is, as you pointed out, though, there's been a strong decline, over the years here, which has been pretty great. And, and I think especially for, when you're looking over there in the UK and all those areas over there where, where those higher prices just really, I was looking at inflation numbers and the difference between the US and Europe. And really, it seems like mostly the biggest difference in terms of inflation that we've had over the last few years has been that ours was buying, right? It was buying products and whatnot. But over there, it was a lot of it was most of it was related to energy costs.
Correct.
So, even inflation, when people go, well, compare inflation here in the US to the UK or to Europe, well, even that is not a apples to apples comparison because, again, over there, it was a big drive as far as energy costs went. That was the big driver of their inflation over there. So, yeah.
Yeah, totally. They'll be at $7 to our 270. That'll easily be double, triple. Hell, there is no natural energy in Europe anymore. Norway is just got gobs of it, but Europe, mainland Europe or UK, has no energy resources left.
Yeah.
Any predictions for July 4th weekend as far as Wall Street? Bitcoin's just going to sit here, do about what it's doing, and no action. It's going to be small volumes. Everybody's going to go on holiday, get drunk, and eat hamburgers, right?
That's basically the way I'm looking at it. Coming into this week, I'd mentioned again that we were going to have that holiday on Thursday and basically 2 Fridays for TradFi. And so it was going to be a low volume week. I think that kind of continues in. It doesn't mean it has to, obviously, but that's kind of where I'm looking at it. I think, I certainly don't think we break out of the top of the range, here in the next week or anything. But I'm looking for it to continue to be kind of just low volume movement right now.
Yeah. Sam, anything from you, buddy?
No, I'm looking forward to the burgers and the alcohol and the fireworks.
Okay, guys. Well, listen, we will see you. When's the next time we're going to see everybody? Thursday?
Friday. Well, Thursday at the Twitter Spaces, and then Friday we'll live stream.
Yeah. Awesome. You guys have a great day. Buy some Bitcoin. Don't do anything stupid. And then buy some more Bitcoin.
There you go.
Thank you guys.
Thanks, Chris. Appreciate it, buddy. Ciao.
Appreciate you guys.